Thank you so much for joining us today on Connect and Collaborate, where we come together each day to introduce you to our network of business and community leaders and to discuss important issues that impact business in Colorado and the region. I'm Tammy Schaefer, your on-air producer, and this week on Connect and Collaborate, our focus is on the energy industry. Really, energy, oil, and gas are such an integral part of Colorado's economy, and we're going to talk with a lot of the local leaders in the industry to discuss the latest concerns and advancements. Also, Energy Week is brought to you by CAP Logistics, a COBRT partner. CAP Logistics provides customized transportation solutions to the energy industries. You can find out more at caplogistics.com. And we are talking today with Drillinginfo. Bernadette Johnson is here. Bernadette, thanks so much for joining us.
Thank you so much for having me.
Absolutely. Bernadette serves as Vice President of Market Intelligence for Drillinginfo. And we're also talking with Patrick Rutty. He's the Senior Project Manager for DI Transform. That's Drillinginfo's software, which translates complex geoscientific data into dynamic earth and engineering models. And I said that like I knew what it meant.
I believed you.
Thanks, Patrick. It's great to have you here.
Good to be here.
So, Bernadette, we're so excited to kind of bring Energy Week, and we've done this before, but it's such an important topic to Colorado. Tell us a little bit about Drillinginfo, what Drillinginfo does, and who's all behind it. Oh.
Sure. So Drillinginfo, we are a data and analytics company. We're a software as a service. So what we do is we take big data. Big data is a buzzword today in many industries, but we do that for energy. We take big data, we manage it, we normalize it, we put it into software, and we sell that software and those licenses to people that are engaged in the industry somehow, whether it's for drilling oil and gas or utility. That's really the focus of our business, is handling that data and helping people use it to make sense of their own business decisions.
So you do that for companies here in Colorado, but nationwide, worldwide?
Mostly here in North America.
Okay.
Not exclusively, though. In particular, maybe on the software side, we have some international customers. I would say more of the movement lately has been to provide more value with that data. So instead of just providing people with the data or the software to look at the data, it's actually to dive into some analytics, some analysis on the data. And Burns Group really does a lot of that. And I think most of your customers are here in North America.
Most of them are. I lead the market intelligence team at Drillinginfo. So we are tasked with everything forward-looking. So price forecast, supply forecast, demand forecast, everything about the future. What's going to happen in the future, and how is it going to impact the industry, investments, you and I who have natural gas utility bills to heat our homes, all of those pieces. That's what our main goal is, that focus, everything forward-looking.
Okay, and so I know you've given a really good description. I have words today, and I'm going to use them. Bernadette, hang in there. So why was Drillinginfo created? And you mentioned what it's used for, but like how was this? Was it inspired, or getting all these analytics together in one place?
Absolutely, and that was the goal. So it was founded, I want to say, over 20 years ago by some very technical people, geophysicists, engineers, who looked at the world and said, we are actively drilling oil and gas, and there's so much data out there, but it's hard to manage, it's hard to find, it's hard to figure out what it means. And so they founded the company, and since then the company's grown. We've acquired other companies that do the same thing, but it was all in this quest to understand, what does all this data really mean?
So I think I get it. So in the past, probably these companies would have this analytics team of their own, and now you've got somebody like Drillinginfo that can manage all of it.
Exactly.
Yeah, in a greater spectrum.
And if I could hitchhike on that, drilling,
Please.
in the early days after when Alan founded it, because it was a small independent, 2 or 3 guy oil company, and what they found was, they were geophysicists, engineers, finance guys. What they found, the hardest stuff to get a hold of was the land data.
Sure.
The filings at the county courthouses of who took what leases and what leases got recorded, and they figured out, without going into detail, they figured out a better way to get that data, to source that data quickly, and then they realized we could sell that.
When was Drillinginfo founded then?
I want to say around 2000.
Okay. Because I was going to say, prior to that, you'd have to go to some county records and find all that information. And
yeah, and in some instances you still do.
Still
A lot
do.
of it's
Exactly.
A lot of it's getting digital.
Yeah, so now it's getting digitized, and you've got great resources for the companies that need this information.
Exactly.
Okay. So what makes Drilling Info different than other oil and gas consulting firms in Denver or anywhere else in the country?
Sure. So my team, Market Intelligence, within Drilling Info, we do a fair amount of consulting.
Hmm.
But Drilling Info at its core is the owner of data, the owner of software. So when we look at Denver and other consultants or people that provide a similar service, we have some key differences. We're one of the largest, so many people come to us. We are actually, many of the other consultancies in Denver actually come to us for their raw data.
Mm.
So we're very much interconnected, and the energy industry in general, I would say, is very interconnected. So we all know people at all these other consultancies. We trade ideas back and forth. The biggest differentiator for Drilling Info is, I think, our size, our accuracy, and how nimble we are. So
Wow.
we've grown double digits even through the oil price downturn
Hmm.
because we can do it faster and better than our peers and our competitors.
So can you give us an example of who uses Drilling Info? I mean, you kind of gave that a broad example, but can you give us more of a specific, like who's really looking for this information and what do they do with it?
Absolutely. So Patrick actually used to be a user of Drilling Info before he
Okay.
came over and joined the team.
Right. So I come from I've been with Drilling Info for 11 months now, so pretty new, but
Mm.
worked for operating oil and gas companies, so companies that drilled oil and gas
Hmm.
wells, many of them here in Denver. And we were consumers of data. Whether I worked at the small private company,
Okay.
I worked for Lanchute's oil company for a while, and they consume data. And I worked for big public, Amoco back in the day, even before Drilling Info. But
Hmm.
our customers include everybody from the very biggest, very biggest US-based oil companies to the tiniest one-man shops. It's literally everybody who uses the data. They just tend to use it in different ways. It's not just companies that drill oil and gas wells, it's the companies that serve our industry. It's the drilling contractors, the
Hmm.
guys who own the rigs and drill the rigs. It's the service companies who come in and do the frac jobs. It's companies who specialize in land. They actually use our data now. So we touch all aspects of the business, big, small.
It's utilities.
Yep.
So
Oh, sure.
someone like an Excel would use us. They're sourcing a lot of natural gas, and they need to know, where is natural gas going to come from in the future? Where do I source it so I have enough to heat homes,
Hmm.
to generate power, for all those things. We actually also work for the EIA, the Energy Information Administration. So that's the big federal government group that puts out unbiased energy research. They're one of our clients. We actually also work for some state regulatory bodies. So I'll be in Virginia in about 2 weeks providing some expert testimony for their regulators that oversee their utilities,
Mm.
helping them understand the market and what certain investments by those utilities might mean for the people of Virginia.
Oh, so that's a great example. Kind of, you need to educate people who are making decisions, and they want the most unbiased raw data and understanding.
Absolutely. So we like to say we don't have a horse in the race. So we
Yeah.
we we don't have oil and gas wells at Drilling Info.
Okay.
We are unbiased third-party data analytics, and we're helping the industry and participants understand what it means. So for some of our clients, good high prices are good. For some of our clients, low prices are good.
Hmm.
So we serve the spectrum, and we come
Interesting.
out with unbiased research. What do we think is going to happen with price and why? Regardless that is sometimes good for some of our clients and sometimes bad.
Oh, it's good to know there's companies with that information out there, definitely. Kind of going now toward, like you said, sometimes the prices are good, sometimes the prices are bad, depending on your perspective and what you're going to do with the resources, right? So not that long ago, oil was at $100 a barrel, and the times were good for the industry. Then it dropped, by more than half, around $40 a barrel. How did that happen, and how does it affect the economy and the general consumer?
So many ways.
I bet.
So yeah, it was $100. I think at its low point it touched $26, if I'm not mistaken, January of 2016 maybe. So
Mm.
it dropped 75%.
Mm.
Bounced around a little bit. It's actually recovered a bit now. I didn't look today, but we're probably around 62, 63, which is kind of a 3-year high at this point. And Bern can go on about oil prices and where they're headed and where they've been. How does it impact the economy?
Mm.
Um, the immediate impact of the precipitous drop at the end of 2014, early 2015 was a bunch of companies laid a bunch of people off. A bunch of companies left
Right.
town. You had 3 large companies that left town at that point.
That's right.
Closed their offices and left town. WPX Energy, new field exploration, and Lynn Energy, and took, I don't even know what the number is, but it safely say several hundred workers with them.
Wow.
So, and that ripples through the downtown real estate market,
Right.
for instance, and
Yes,
Yeah.
that because those companies leaving those
Yeah.
large corporate type buildings,
Yeah.
right? And then it probably trickles over to the residential real estate industry if you've got that
Absolutely.
number of people leaving,
absolutely.
and then into the economy again for just what those people would purchase as
Right. So
basic
a
consumers.
big sort of negative impact in terms of a lot of
Yeah.
relatively high-paying jobs. I mean, average job in our industry is $105,000 or something like that. Those are good-paying jobs. So a lot of those people lose those jobs. That income sort of goes away out of the system. The state loses revenues that they gather in taxes. On the good side, it sure gets cheaper to move stuff around. You noticed it
Right.
at the gas pump. It was nice to fill up when, once in a while you got gas for $1.98.
Right.
A lot of people bought SUVs, right? I mean, it's
Yeah.
when you're paying $1 something a gallon, it's a big deal on people's budgets, many
Yeah.
people's budgets, if they're not directly in the industry. So
And then, like you said, bad for some, good for others. Then how does the industry or any industry adjust to that kind of environment with such big swings?
I think it's interesting because for oil and gas, this has always been the way that it's been, right? So
Sure.
this is a commodity. Our natural gas market in the U.S. is the most volatile commodity market in the world. I'm an economist, and we study the U.S. natural gas market because of that. So in many ways, this was to be expected. I think it did catch a lot of people off guard. It does every single time. Every time there's a downswing, everyone is shocked. Every time there's an upswing, everyone is shocked. So I think it's something that you never quite get used to. You know it's going to happen. You can't pick the timing specifically. You may not know the specific reason why, but it's going to happen. So if our price today is at 63, the price in the future, there's going to be a period of time where it's higher. There's going to be a period of time when it's lower. And those swings, they happen very quickly, and they catch a lot of people off guard.
Yeah.
And the companies that are in a strong financial state, when you head into the roller coaster down, they're still around. The companies that were overextended had tons of debt, had obligations. They had 10 rigs running in an area where suddenly it became uneconomic to drill. A lot of those companies aren't around. We
Wow.
lost a lot of companies.
We did. I think that's a great point because if you're a strong guy, the oil price might not be great, but it's also a chance when these other guys go bankrupt for you to snatch up some very good assets cheaper than you would have otherwise gotten them. So
Yeah.
it's very much like any other industry you look at. You're going to have ups, you're going to have downs. The strongest survive. When it's great, it's really good. When it's bad, it feels really bad. But we always come out of it on the other side, and things always tend to work out.
The downturns are sort of a really dramatic natural selection event.
That's a interesting way to put it. Yeah, that is. Where then does Colorado rank in the U.S. in the grand scheme of things? If you have these kinds of fluctuations locally.
Bern
Sure.
has the knowledge.
I have some of the knowledge. So
Tell us the knowledge.
depending on if you're talking about oil or you're talking about natural gas, we rank number 7 or 8 in the country. So we're still a big player. We produce a lot of oil, we produce a lot of natural gas. So we're a big player. I think in terms of activity, there's about 1,000 rigs, 1,050 rigs out there in the country right now. About 34 of those are in Colorado. So nowhere near the high of 80 that we saw before the price collapse, but we're running rigs. The DJ Basin up in Weld County, we're running rigs. On the western slope, the Piceance is the big one out there. We're running rigs. Colorado-based companies, they can exist even in today's price environment. Everybody's gotten more efficient. They can do more with less.
Yes.
The break-evens, so how much does a price have to be for you to make money, are lower now than they were 2 or 3 years ago. So by and large, I think Colorado fits we're right in the thick of it. We're right in the
Yes.
industry.
Yeah.
We're a key player. And what happens here is important, not just for us, but more broadly, the U.S. energy market.
For perspective, and I'm just thinking of this because my nephew was working in Williston for a bit. So if Colorado is about 7th or 8th in the country, what's North Dakota?
So it depends on what you're talking. So,
Okay.
so
Okay.
Colorado, for natural gas, we are producing about 5.7 BCF a day. So put that in perspective. The U.S. produces about 80 BCF a day. So we're up there. 5 BCF of that is a big number. On the crude side, we produce about 400,000 barrels a day. The U.S. is approaching that 10 million barrel a day mark. So there, we're also still an important player. The Williston is a big oil oil area.
Right.
So North Dakota, big oil producer, not much natural gas.
Exactly.
So the Williston produces about 1.2 million barrels, so 3 times as much as we do.
Per day?
Per day of oil.
Wow. Of
But
oil.
natural gas, it's about 1.2 BCF a day. So it's 20% of what we do.
Sure. So there's a balance of
There's definitely a balance.
who's producing what.
Exactly.
Yeah.
And so it's, in some ways, we're definitely a much bigger player on the natural gas side, but they have more oil production than we do.
Wattenberg Field, if I'm not mistaken, is, I believe, the 4th biggest gas field in the onshore U.S. It's a huge gas field. Wattenberg, that's the field up near Greeley.
Yeah.
It's
Okay.
the one up in Weld County.
Incredible. So we were talking about like the price of oil per barrel. Are we in a recovery now? You mentioned we're back up to what, about 60?
Low 60s.
60s. Will oil ever reach $100 a barrel again?
I'm going to give the inexpert opinion, Bern, and then you give the expert opinion.
Okay, I like that.
I would say maybe. I mean, I have no idea, right?
Well, sure, you
Nobody
think
knows this stuff,
eventually at some point, but
right? I mean, eventually, at some point, it could get there again, right? If we had said it would never get there again 10 years ago, we would have been wrong. My personal opinion is we are in a recovery.
okay.
I don't know that prices are going to stay at 60 or 65. I think they could hang out in the $50 to $60 range for a very long time. I feel like there's a fundamental shift in the energy mix in North America, at least, also in the developed countries in Europe in particular, where there's sort of this social mandate for other sources of energy other than fossil fuels. And I think that's going to ultimately put a cap on demand for fossil fuels, which, and again, Bern can amplify on this, there's still increasing demand for fossil fuels in the world. I mean, it's still going up, what, 1.5 million barrels a year or something like that?
Absolutely. Yeah, and I would say I'm generally in line with Patrick. I think today's price, 63 up to 65 we've seen. We are in recovery. I think there is a pretty effective ceiling on that price, though. So are we going to go to 100 tomorrow or next month or next year? Probably not. And the reason is, if we think about it, the U.S. is a game changer. This shale revolution that we hear about. We talk about it, we hear about it. It's a really big deal. And what it basically means is that the U.S. has taken over as the marginal supplier of natural gas, of crude, of NGLs like propane and butane globally. So we are a big player. We're exporting all of those products today. We're exporting natural gas, we're exporting crude, we're exporting NGLs. So why is that important? It means that the price for us to produce is really what matters. It's what drives overall pricing. So because we can grow over 1 million barrels of crude year over year at a price around 60 to 70, we don't need $100 a barrel anymore. The globe does not need $100 a barrel anymore to meet that growing demand. So we have changed the game. The U.S., the shale revolution, it's certainly important for us. It's important for Colorado, for the U.S., but it's also important globally.
And so I see that as being kind of a relief for us consumers then.
Yeah.
That it's like maybe we don't have to worry about outrageous prices at the pump unless somebody just decides they want to charge us that.
I mean, you could extend that thought process.
Well, you're all using gas anyway. Let's go ahead and crank it up.
Yes.
You could extend it geopolitically or politically. Us as consumers or us as taxpayers, maybe we don't have to go do things in other countries.
Right.
Because that's where the oil is.
Because we can produce our
Because
own.
we can produce our own.
And that's the game changer, right?
Yeah.
It's a game changer.
Yeah.
It's a game changer in a lot of ways. And I would say the one point about gasoline prices or diesel prices, a big chunk of that's actually taxes.
Yeah.
So we don't want the government to get too comfortable with the fact that prices are too low and say we can bump that tax rate up a little bit.
Okay, so is there anything we should rewind in what we just said in case the government's listening?
They're never listening.
They're never listening.
Bernadette's the
They're
economist.
never listening.
Bernadette's the economist, and I'm not. But when I'm talking to my neighbors about this stuff, I say it this way. The United States has super elastic supply. Like, it's not quite this simple, but like we can just kind of turn a knob and produce more oil or gas if prices support that, and if they don't, we just turn it back down. And that's the unusual situation that we find ourselves in, where we're the marginal producer.
Exactly. Yeah.
Wow. So then where do you see the price of oil going for the next, let's say, 6 months, year and a half?
So this is probably not going to be a popular opinion, but I think the price that we're at today is probably a little too high too soon. And the market does this. So we get some good news. We start to see some good numbers, good supply demand numbers, and then prices go up. But we usually overcorrect. We overcorrect up, we overcorrect down. So what I think is today's 63 is probably a little too high. It should still be in the 50s because the market's not in balance yet. We're still working off 2 years of stocks. We started throwing crude in storage because we weren't using it. So we got to use that storage before you have a market that's in equilibrium, that's healthy. So I think today we're a little too high, probably bounce back to the 50s. I think we will bounce back up to the 60s, 70s as the market truly recovers. I think that 70 mark is a pretty effective ceiling, and much above that, it's going to be hard. There's going to have to be a black swan event that we can't predict. We may know something's going to happen, but we don't know what. So that might be unrest in the Middle East that knocks out a lot of supply. It may be terror attacks in Nigeria that knock out supply, and that's happened in the past few years. It might be the situation on the ground in Venezuela, and their economic collapse pulls out more crude, pulls down supply, which means prices come up. So it's going to be a black swan event if prices are going to be above $70 again.
I'm looking at Patrick. It looks like you definitely agree with.
I'm in the same place. I'm looking
Bernadette's
at
assessment,
the oil stocks that I own, and I'm going, and do I have a moment to sell because I think it's going back down to 50.
Wow. So then what activity do you see most in the industry, and what does that mean? How's it going to affect the future? What are the trends that worth noting?
Sure. So on the production side, I think we've tightened our belts. We've gotten much more efficient since the pricing downturn. So what's happened? We're only running 1,000 rigs. We were running 2,000 rigs before the price collapse.
Okay.
But every single one of those rigs is more efficient. We're drilling faster. We're drilling bigger wells, so we don't have to drill as many to make that production. We don't have to disrupt the surface or land to do that. And we continue to march up that technology ladder and do more with less. And so that's the trend that's been true over the past 2 years. We don't think it's stopped. It's going to continue. That's the big important one that helps us when there is a ceiling on prices, continue to make money, continue to drill wells, continue to add rigs, is really that efficiency push. So I think that's going to be the big trend on oil and gas. I think you're going to see some interesting things with renewables. So that's something to watch.
And I think, and I don't want to tag on the renewables quite yet, but necessity has been the mother of invention, right? Through these tough times, we've gotten leaner and meaner and more efficient, like incredibly more efficient. Another thing that's I think is driving the way oil companies behave right now is Wall Street. Wall Street has changed what it sort of measures oil companies by, and it's not so much growth in production anymore. It's a good balance sheet. Which is a pretty fundamental shift, I think, in the way that they were valuing oil equities. And
where they're looking at their production costs versus how much they're producing and what kind of cost they're getting for it.
Are you profitable? Can you be profitable at $60 versus just, up into the right growth?
So if they don't have so much debt, then they're a much bigger, better. How did you say that? How they value it?
I don't know what I said.
Well, okay, but I think we get it.
Yeah, 2 minutes.
So with just a little bit of time left in this segment, we're going to talk more with Bernadette and Patrick from Drillinginfo when we come back after this break. But, we think about oil and gasoline for our cars and trucks and the natural gas to heat our homes, cook our food. What else is oil and gas used for or to make that we don't think of on a daily basis?
Yeah, so I think, and I'll get these numbers roughly right, so don't kill me if I'm off by a decimal or so, but about half a barrel of every oil goes into transportation fuels. So it's quite a bit. I mean, it's the aviation fuels and the diesel and the gasoline for our cars. I think another 15-ish%, maybe 20% is, maybe 15% is fuel oil, so for heating homes, mostly in the Northeast. You might be able to expand on that or correct me if I'm off on that a little bit. A whole bunch of it, though, goes into all these other corollary products that we were just talking about before the show. Everything from, tons of it go into plastics.
Sure, we're looking at like my water cup here.
Right. All the grocery bags, all the hard plastics, all the HDPE, all the PETE, all of those are fundamentally they're made from oil.
We were talking about a squishy ball I saw somebody buying, and it just smelled like petroleum there in the checkout line. And when I pointed it out, she's like, "I'm giving this to my kids. Don't say that." But what did you think it was made out of?
And it's everywhere. It's in the lining of my Starbucks cup.
Wow.
It's on the tires in our car. It's everywhere. It's the
Fertilizers.
whitest white dye. It's actually a hydrocarbon. So that's where, if you see something really white, whether it's paper or something else, it's hydrocarbon that made it.
And I'm looking at our pop-up banner that's made out of.
That's a hydrocarbon.
Yeah, for sure.
That looks like polyethylene.
Yep. Oh, this is so much fun. I've never had this much fun talking about energy with Bernadette Johnson and Patrick Rutty, both from Drillinginfo. We'll be right back with more.
KDMT Arvada, Denver.
So glad you're listening today here on Connect and Collaborate. This week our focus is on the energy industry, and we are really pleased to be talking with Drillinginfo. We have Bernadette Johnson, Vice President of Market Intelligence, and Patrick Rutty, Senior Product Manager for DI Transform, one of the I'm just going to say it's your software.
It's our really cool software.
Makes things happen really super great. And I also just want to point out that we have Energy Week is brought to you this week by CAP Logistics. They're a COBRT partner and they provide customized transportation solutions to the energy industries. You can find out more at caplogistics.com. That's CAP logistics.com. So we thank them for their sponsorship this week. So back to Drilling Info with Bernadette and Patrick. We were talking so much about, how we're getting access, what kind of production we're able to really excel at nowadays. What does the future of oil and gas look like for 2018?
So
they're looking at each other, which you can see on the radio.
I'm going to grab this
Yeah.
one.
Okay.
Yeah, grab it.
2018, what does the future look like? I think prices may drop a little bit and then recover.
Okay.
I think the U.S. will continue to grow a lot of volumes and continue to be a bigger and bigger player globally. And that's true for crude, for oil, for natural gas, and for NGLs, like the propanes and the butanes that we also produce and we call hydrocarbons. So 2018, kind of more of the same, a market that's relatively stable, growing price, fluctuating price right around where we are. And I think what that translates for Colorado is continued success. So a couple more rigs might be added. We might see some transactions take place. We're going to continue to see these rigs active and drilling wells and growing production. Our oil production in Colorado is on a pretty strong upswing.
Yeah.
And we think that's going to continue. Natural gas is a little tougher, probably stay a little flatter because the new unconventional shale plays are mainly oil here. Natural gas will kind of hang in there, continue to be meaningful, but not grow necessarily like oil.
Patrick, your thoughts?
Maybe just to amplify a tiny bit on what Bern said so well, we expect prices to remain above break-even levels, right? So from the perspective of oil and gas companies who are drilling for oil and gas and all the service companies that supply them, we'll still be able to drill and make money. And so I think things will be relatively good, whether prices are $50 a barrel for oil or $65, anywhere in that range. I think it's going to be a solid but not spectacular year.
And what does that mean for the nation or even internationally?
So the U.S. is becoming a bigger and bigger player. And we've always been important because we've always used a lot of energy, right? But now it's switching a little. We still use a lot of energy, but we're actually producing a lot of energy now too. So we are up there with the top producing nations in the world. And so as we continue to grow production, we have a bigger place at the table. When we think of OPEC, geopolitical concerns, everybody that's part of this 100 million barrel a day oil market, we are 10 to 13 of that. When you look at our crude and our NGLs, we're an important player. We're right there with Russia, with Saudi Arabia, with the other ones that we think of as these great big producers. So what does that mean? It means we're going to export. We're exporting crude today, oil. We're exporting natural gas. We're also exporting NGLs. And we're going to keep doing that. And those exports are going to grow. So you're going to see our barrels around the world at different places that maybe they've never been before. It means that dynamic is going to keep a lid on prices. So we're not going to see $10 natural gas or $100 crude. But as we continue to grow, become a bigger part of the energy pie, there's a lot of interesting things that happen. So when you think in terms of national defense or national security, there's a lot of implication behind the fact that we're growing so much. When you think about the strength of U.S. oil and gas producers, the tax revenues that continue to impact states, Colorado, Texas, other big states that are big players, that's going to continue to happen and continue to be really strong for us.
Just another subtlety that's maybe too far down in the weeds too, but the refineries in the United States were more or less, or at least a large part of them, were built to handle, let's just say, really bad oil, like really heavy crude.
Okay.
Poor quality crude, let's say, like from Venezuela. And some other places. They were built to handle that because those were sort of easy, convenient, relatively cheap sources of supply. Now that we're producing so much, a lot of the high-quality crude that we produce here, we have more than our refineries need, and so we're actually able to export like a really high-quality oil, if I'm not mistaken, Bern.
Absolutely. Asia demands our barrels.
Right.
Europe demands our barrels. There's a lot of places internationally that actually that pull U.S. barrels.
So we're now creating a better product than the companies we'd been depending on.
We are. We're definitely we're right in the thick of it. Where our barrels are important. We're still seeing those, I'll call them heavier barrels, the uglier barrels that are harder to refine. Think of Canadian oil sands or Venezuela.
Right.
That's still out there. That's a piece of the puzzle.
And we're still doing that, right? We're still transporting a lot of that crude from Canada.
Absolutely. And
Yes.
we're directly linked to the Canadian energy
Sure.
market, right? Through pipelines, through
Oh, they're a huge
policy.
partner for not just the U.S., but Colorado in particular.
Absolutely. And I think the really good thing and the interesting thing is those heavy Canadian barrels. You combine that with our very light American barrels, and you have a very good mixed barrel. You can produce a lot of high-value products, and that's what we're doing, and we're going to keep doing that.
You literally blend those barrels together.
Really?
Exactly.
Yeah.
Okay, so can I clarify just a question that pops up for me when you say the heavy barrels and the light barrels? Are we looking at the consistency of that crude, that product, or do those barrels actually weigh different?
So this might be a little too
Both.
much detail, but
good
think of it like it's all about the length of that carbon chain. So any chemists out there listening will understand exactly what that means. So the longer the carbon chain, the heavier, the thicker, the blacker the crude, and that's Canadian oil sands.
Okay.
If it's a little shorter carbon chain, then it looks more like U.S. It's lighter. It's a liquid, so it flows easily. Lighter
A
in
little
color.
more viscous.
More viscous. It might look like the oil you actually put in your car
Okay.
before it gets run through your car.
Gotcha.
So not the black,
We've
but
seen that,
the
yeah.
light colored. So it might look more like that.
If you drive an
So
old
it's-
car
it-
like I have.
Exactly. So it's
Have
it's all,
had.
have had. It's all about those carbon chains. So it's probably a little too much detail, but if you think about it, not all crude is created equal. We talk about
Sure.
it as the crude market,
Uh-huh.
but there's a huge variance within that market. Different barrels are worth different amounts of money. Refiners do different things with certain barrels. It's a very complex market when you start peeling back the onion.
When people talk about heavy crude, I think of molasses.
Sure.
Think of molasses. It's oftentimes that viscous, sort of that gooey. And a quick follow-up on the international scene. Now that places like Japan and other countries are actually asking for, craving, importing our barrels, it changes the energy mix for them. It changes sort of their position in the global geopolitical economic world, right, where they're not importing so many barrels from Saudi Arabia, or they're not importing so much gas from Qatar, or other previously historical big suppliers,
Or Russia.
or
even,
Russia in
right?
particular.
So we've talked about energy independence for a long time and how that reliance on foreign oil can be a bad thing. Will other countries ever buy Colorado oil and gas, or is that right there in the market that you were describing?
I think they could. I think they might already be. So one interesting thing about the U.S. market is that we are very well connected. We're connected with pipelines, with truck, with rail. We transport barrels all around the country, finding the perfect home. So sometimes Colorado barrels should best be refined in Louisiana or Salt Lake City, because it's all about the type of barrel. So when you think about production of oil, at the same time we're producing, all across the country, there's pipelines and truck and rail that are moving all of those barrels
Right.
to the best place that they should land. And because of that, Colorado barrels end up on the Gulf Coast. They end
Okay.
up at refineries in Texas or Louisiana. They can definitely end up at our own refinery here in Commerce City. They can go to Salt Lake City. They can go north up to Canada.
So
And so that's
whoever
already
is
happening.
best positioned to process that crude.
Yes, because every barrel is different and every refinery is different.
Wow.
So there's a lot of complexity when you start looking kind of underneath the covers. And I think as a part of that, when we talk about U.S. exports, we're not sending out the same barrel every day or every cargo, right? So some of those might be Colorado barrels. Some of them are Texas barrels for sure. Some might be North Dakota barrels. Some are Canadian barrels that are coming through the U.S. And all of that is happening. It's part of a very robust market where everything, it's a lot of information, a lot of dynamic movements so that the whole market works the most efficiently.
Can I ask a question?
Please.
Not against the rules.
Never.
Do you think, Bern, so Colorado barrels for sure are making it to our own refineries and then being exported as refined products?
Yes.
For sure. Do you think any Colorado crude barrels are making it as exports out?
I think they are. I
Yeah.
think that we can blend some of our Colorado barrels with Texas barrels or Canadian barrels and send those on the water. We're definitely sending out the products, as Patrick alluded to. I think you mentioned energy security. We talk about that, and it's a key theme always since the 70s. It's been a very big deal. If you were to draw a box around North America, Canada, U.S., Mexico, we are already energy secure. So if you think of Mexico and Canada as our partners,
Right. We're able to produce enough.
we produce more than we use.
Yeah.
And we actually have a balance that we send out to the world.
Yeah.
So we are actually net energy secure and actually providing some of the energy, oil, natural gas, NGLs that the rest of the world needs. So it's an interesting way to look at it that sometimes gets lost in the politics or in the messaging.
Right. So I want to ask, and I hope I'm not taking it too far a different direction, but is some of that threatened by these concepts where people are against fracking or this or that? Because that's what's getting us to
Absolutely.
produce so much more.
Yeah.
Absolutely. It's this keep it in the ground movement.
Yeah.
So they might be fighting against the pipeline, but it's not the pipeline they're fighting against. Really, it's the idea that they don't want hydrocarbons. They don't want dirty fossil fuels dirtying up the environment. And so we call it the keep it in the ground movement. I think many of the people that are in the movement would agree with that. And
Yes.
it's very important because if you start blocking pipelines or blocking the ability to drill, then you can't grow that production anymore. And then we lose our place at the table
Yes.
in global energy politics and just general geopolitics.
Yes, but
So
for
it's
us
very
to
important.
be in a position where we're producing our own and am I wrong to say it seems to be unlimited? Like we're
It essentially is at this
Yeah.
It's that
point.
super elastic supply
It is.
thing that I
they're fine.
There's some basins in the country where we have more than 100 years worth of inventory. Where we used to think about this idea of peak crude. We're going to run out of crude. What are we going to do? How are we going to meet these energy needs? And now it's the opposite. Now we as an industry and as people, economists that track this industry, are talking about peak oil demand. This idea that renewables are growing. And oil, at some point, when we have things like India, they're going to stop selling combustion fuel engines 2040. There's some top-down things that
Right.
are happening globally that say there really could be a peak somewhere in the future that says maybe the market today is 100 million barrels. Maybe it grows to 110, and then it peaks and it starts coming down, and we start using less of these fossil fuels and more renewables, more other types of energy to meet our needs.
Tammy, can I elaborate on something you
Please
asked before about
do.
fracking? And
Yes.
So fracking's been around 65 years. We've been fracking wells for 65 years in vertical wells.
Right.
Wells that we drill straight down and they produce from one oil or gas reservoir. About 10, 15 years ago, a company down in the Fort Worth Basin, so around Dallas in Texas, figured out over the course of several years of experimentation how to drill horizontally, which we also already knew how to do, but then how to frack that long horizontal piece of the wellbore. And that has been the game changer.
Exactly. Yes, and
it's
thank
that
you for
combination of
clarifying that.
technology.
Yes, because we've been fracking
A long time.
Forever.
forever. Yeah.
Yeah, 65 years, literally.
But it's now, and correct me if I'm wrong, but it's now you can keep that rig in one place and get more out of it. So you're not having to relocate and rebuild.
So it's that in part,
All the time?
but I think
Okay.
I would maybe even simplify it even further
Plain-
than that.
Please.
We can now, because we can drill horizontally and frack that horizontal now, we can now produce oil from rock that is just worse. It's worse quality rock. It has sort of less oil per unit volume. But because we can do this fracking thing, we can actually get
can
the
still
oil
get it
out.
out.
So we can drill places that we couldn't drill before.
Right.
And that is what it's totally expanded the
And
sandbox,
that's what's
if you will.
expanded the
Yeah.
production.
So back to Burns' rectangle around Mexico, Canada, the United States, to the extent that you think it's a good thing that that rectangle, that North American rectangle, is oil or energy self-sufficient,
Efficient.
fracking is critical to that story.
Exactly.
It's critical to us achieving that. U.S. oil production is up from 4 or 5 million barrels a day to close to 10.
We're going to hit 10 this year.
That's been the dial that's done that. If you don't think it's important that we, and I'm saying this not to be like
Facetious.
facetious, if you think there's a better outcome, then we don't need fracking, right? If you think it's
Sure.
not important that we be energy independent or that we're actually going to be able to supplant enough of the fossil fuels energy base with other renewables, then you know what, we can dial it back.
So, and that brings us exactly to, getting into the politics of it. So, if in an election year, if a ballot measure that hindered oil and gas production were put on that ballot before voters and that measure passed, what would it mean for Colorado's oil and gas industry?
So we'll simplify it to a ballot measure that sort
Okay.
of impedes our ability to do that stuff.
Right.
And there are many different ballot measures that have been proposed and have passed locally in Broomfield and other places, that various ways to prevent us from doing what we're able to do with the regulation of the Colorado Oil and Gas Association right now.
Okay.
Bottom line, it would certainly chase activity out of here into more friendly places in the United States, because we have, again, I just talked about the fracking being the thing that really expands the running room. There's so much opportunity to drill down in Texas right now, or up in Wyoming, that has a friendlier regulatory and just sort of social. The license up there, the social license in Wyoming, is much more forgiving. I think it would chase activity out of Colorado.
I think that's fair, and I think anything in the future that happens damages the energy, the oil and gas industry in Colorado. And if you think about it, if you think about that history, where 2 years ago we had several ballot issues that we voted on that fortunately did not pass, but this is a trend. It was 2 years ago. It was 2 years before that.
Right.
And so if you look at Colorado compared to other states in the country, we are already more risky to do business here than in Texas, than Wyoming, because we have this history of trying to put roadblocks in front of the industry. So if it's me and I have some money to invest, do I invest here? Do I invest in Texas? I have to look at all my risk. I have to say, is Colorado going to bring forward a ballot issue in 2018 that's going to stop me? Maybe it won't be 2018, but what about 2020? 2022. Like, every time this comes up, it damages and it creates more risk when you're looking at placing capital. When we're trying to compete in the country with everybody else, every other state, every other basin that can drill and make money.
Here's a personal testimony along those lines, and this is short. 3 years ago, I started a small startup oil and gas company with a couple of buddies. We never made $1 gazillion and did all that stuff, but out of the gate, our pitch to our potential investors was, we want to go drill in the Powder River Basin in Wyoming, and we want to drill in the DJ Basin, which is Colorado's basin. But we told those guys, we just want to drill in the northern part of the DJ Basin because it's in Wyoming. We deliberately cut that at the state line. We weren't pitching a Colorado strategy because of the threat of the ballot measures.
Of those kinds of ballot measures. And then I want to point out then that, as you mentioned in the previous segment, that when we're taking that business out of Colorado, it's affecting our economy. It's affecting the real estate market. It's affecting our consumer spending.
Tax,
yeah.
Severance tax.
So it all factors in.
Yeah.
Oh, and I had another point I wanted to say on that, but I knew I would only remember one. It'll pop up later in a second. And so, like you said, they'd move to some of these other oil and gas basins, like you described. What other impacts would there be, and how else would we notice a difference? Kind of what we just said with the economy.
So if activity leaves, it means we have less drilling. So we have less rigs active, and it's not just oil and gas that's impacted. It's electricians, it's plumbers, welders, it's these other industries that provide a lot of services to our to energy in Colorado. I think aside from that, something that's interesting that the state's dealing with right now and the counties are dealing with is the severance tax, and is the local tax revenue that comes into counties as a result of oil and gas drilling. So if you think about it, tax is a percent of your revenue. So we're telling you that the oil price is never going to be $100 again. Maybe it's 60 or 70.
Right.
So already out of the gate, you have 30 to 40% less revenue coming in.
Okay.
That's never going to come back. It's not going to look like it did in 2014.
Okay.
If you combine that 30 to 40% less revenue for taxes, it means we have to find that money somewhere else. Or we can't fund schools, and we can't build roads, and we can't invest in infrastructure, and we can't do all of these things that are currently being funded with that tax revenue. If you layer that already 30 to 40% that's lost because the industry's changed, and you start talking about less activity, well, now you have volumes that might start coming down. So every single barrel, if you're getting tax revenue per barrel, if those barrels are shrinking, then you're losing more money. So when we talk about tax revenue, we talk about the impact to all of our communities. I think it's something we should focus on. The past couple years, the major states that have a lot of oil and gas production have been running major budget deficits. And that's not going to stop because that money's never coming back. So that impacts all of us.
To be fair, on the flip side, if activity decreases, you won't drive up I-25 and see big rigs in the air, or you won't be landing at DIA from the south and look down and see a rig right there. So the rigs will go away. You'll see less truck traffic on the Weld County roads.
You might pay a little more to fill up your tank for your engine if that barrel has to travel more to get you. There's a cost associated with that.
Yeah.
You might pay a little more for your utility bill if that natural gas has to travel farther because we're not producing as much anymore. You might, and I think to Patrick's point, to play devil's advocate, you might incentivize additional renewable investment in Colorado because of those same reasons. If you make the other oil and gas more expensive, then the renewables start to compete more.
Right. Well, and we'll talk about that more this week as we focus on Energy Week, that, there's definitely an all of the above strategy. It's just you can't get you can't you can't dive into one completely. It's a transition, right?
Yeah.
It is.
You don't flip the switch and turn off the fossil fuel.
We're doing solar energy now. Bye.
Okay.
and I think an important thing, solar can provide some power for vehicles. But what about plastics and rubbers and everything else that we use hydrocarbons for. You
Right.
can't generate the lining of the Starbucks cup with solar today. You can't produce rubber for tires on your car. You can't nylons. Stretchy, right? I like
Well, let's just get rid of
stretchy.
nylons anyway, if we're talking about
don't want
pantyhose.
nylon.
But other kinds of nylon are very
Yes.
important.
Your ski jacket.
Yes.
So we might all be running around in wool.
And remember, we
Something
talked
like
about this
that.
in
Yeah, not quite as water resistant.
Not quite.
Remember, we talked about this in the first segment, and again, check my numbers, but I'm pretty sure these are close. About 30% of every barrel is that other stuff. Right?
Yes.
It's not the
Yes.
transportation and the heating; it's that other stuff. So, almost regardless, there's certainly nothing on the horizon to replace that 30% of the barrel.
Okay. Wow. Thank you for that perspective, because I think we all know that deep down, but without that connection, we're not thinking of it, right? So I think we maybe covered this, but as a whole, what's the future of energy in Colorado?
I think you said it. It's an all of the above. I mean, we already have. I actually looked up this number. I think we were about 17% wind generation in our energy mix in Colorado right now. That's a pretty healthy number, and that number's come up a lot over the last few years. We are fifth most potential for solar. You know, we're not the sunniest place. That's California, Arizona, and I think New Mexico.
But we're close.
But we're right
We're
up there. So we
Wow.
have huge potential for solar, and that I think has been maybe underdeveloped relative to some of those other places. So I think the future is all of the above, with an emphasis on the renewables. I think, and again, if not driven by economics, driven by a social mandate for it.
Bernadette, you
I
would
agree.
agree?
I agree.
Mhm.
And I have one last story if we have a few
Oh,
seconds.
please.
I tell this story all the time, but I didn't realize it. And it goes to this idea of peak oil demand.
Okay.
And this idea that the renewables are growing and it's something we can't stop and we should embrace it.
Yes.
So I bought a car recently. It's a BMW. So I didn't even know they had a hybrid SUV. They have an X5 that's a hybrid. You can plug it in. You can get 50 miles to the tank. Then after that's exhausted, your hybrid motor works with your gasoline motor and increases your miles per gallon by 50%. So instead of 18, you get closer to 30.
Wow.
So if you think about that, and BMW has said, within 5 years, every vehicle we sell will be a hybrid. So that means in the US, the trend is when we buy new cars in the future, 50% more efficient miles per gallon, which means you're dramatically impacting our demand for gasoline. We don't need as much gasoline
Right.
if we can be that much more efficient. And it's not just BMW, it's all the major car makers.
Sure.
So this movement that's happening, it's not just top-down government, it's not activists, keep it in the ground. It's also private business companies coming out and saying, we're getting behind this, we're growing this. And so I think it just speaks to the fact that it is happening. We are probably going to hit this idea of peak oil demand at some point in the near future, before 10 years. And it's going to change the way that all of us use energy and how we get that energy and how we grow in the future.
It's disruptive technology, which at Drillinginfo, we love disruptive technology. It's what we do, so it's so
Right.
hard for us not to embrace it.
Yeah. We're so fortunate today to be talking with Bernadette Johnson and Patrick Rutty with Drillinginfo. Let me tell you, this has been, to me, the most fascinating conversation about oil and gas and energy. Thank you for really, making that a conversation that I think everybody can understand and be a part of. Really appreciate that. I just want to wrap up a little bit because we are focusing on Energy Week here on Connect and Collaborate this week. And Energy Week is brought to you by Cap Logistics. They're a Colorado Business Roundtable partner, and they provide custom transportation solutions to the energy industries, so they're really deeply involved. You can find out more about Cap Logistics at caplogistics.com. And Bernadette and Patrick, thank you so much for being a part of our show today and kicking off our week of energy topics. So any last thoughts you'd like to share with our listeners?
Thank you so much for having us. I think we always welcome any opportunity to be part of the conversation.
Absolutely.
We appreciate that. And this is one you want to go listen to the podcast if you think you missed anything. cobrt.com at the radio podcast page. And thank us again for Drillinginfo for giving us all this info today.
Thank you.